Okay, I think I am on. I just updated my yes, hopefully this will work. If not, we will see. Okay, let's load to my video here. Hopefully you guys hear me. If not, well, life's tough. If not, oop, there you go. All right, a bit rusty here, you guys. I know I have not been posting for quite some time. Oh, hi, Minnie. What's up? What's up? Thank you for joining. Just been busy. I got new puppy lately. She's a handful. Her name is Star. Courtesy my mom. My mom loved the name, so go. Hi, Sharon. What's up? What's up? Sounds good. Thank you. Thank you. I just updated the OBS, so they just have a new version coming up. So hopefully this would help with the audio. I have no idea. All right, so how everybody's doing today? Howdy, Michael. What's up? What's up? Um, yeah, no agenda. Nothing changed. I feel like every time we talk about GameStop, it's about the same thing, right? Nothing new developing. I feel like the silence of roaring kitty is deafening. I don't know what's happening, but this is usually the best time to buy, right? Like I feel. Just my thought. Anybody agree? I'm here just to echo chamber here, you guys. So if you're not here for that, you're welcome to leave. That's what you want to do. All right, so just a couple updates about me. Like I said, I just got a new puppy. A couple. Well, my mom actually. It's not my dog, but she has been trying to get a new puppy. I know Moran says Tito. Um, so I have to copy his lifestyle, right? Just kidding. No, it's actually my mom. My mom always wanted a new puppy after Toby. For those of you who doesn't know, like Toby passed away since November. So I just feel like it's a little bit too early for me to get a new puppy, but we got her now. The female Star, and she's kind of like we think she's a Dalmatian, but I think she's a bit too short for that. She might be some other mix, but she has a little spots here and there. But I could show a picture later on when I get it uploaded to my computer. But anyway, just a small update here. And of course, I've been kind of like busy in my personal life too. But who cares? Who cares? You know, people are here to listen about GameStop, right? Nothing. Sorry, yeah, I'm just killing time. Just killing time. So let's go. Now, I have been looking at, let's see, the price action pretty closely lately. Of course, I've been trading, not stock, just contract, call contract here. So I'm still doing that, my Pullman covered call, you know, pretty happy with it currently. Been kind of dollar cost averaging down, building the position on the call. Now I don't want to do too much, of course, like it's a small account that I have. I mean, relatively small compared to my share, but it is pretty substantial. But I want to actually trim it down a little bit because I'm a bit overextended at the moment. So let me tell you what I did here. So I did buy some call, kind of in the money call around here. I've been adding, you know, when it was, see this trend line right here. I thought it was gonna bounce, so I added around $25. And that call option right here at the time was $700. So I'm kind of down, but what I did immediately after I bought the 700, I went to the short dated one and sell a 28 or 28.5, like around here, for a small, for a smaller portion, just to offset the loss. And so when the price comes down from 25 to now at the current price, these call would be rendered worthless. So that's what pool man's cover call is to kind of give you the ability to kind of offset the loss of the call option, the value of the call option for the long dated one. So my goal is to build that position until the earnings, right? So that's why I picked this date. Of course, like again, I'm just experimenting. But I have been kind of went too heavy on it. Currently, I have 13 calls for the long dated one, and of course, kind of write a short dated one as well, just to offset some, collect some premium until the time comes, right? So my goal is to only have maybe 10 or even less if it permits, right? I don't want to overextend too much here. But eventually, of course, I wanted to sell that call for a profit. I'm hoping also to, if I could accumulate the premium from the short dated one until the expiration date and not get the share to get recalled or hit the, strike price low enough so that it don't get exercised, then I would be able to accumulate as much as I can in order to buy or exercise the long dated one. I hope that makes sense, because if I were to exercise this particular one right here at 20, of course, if I do that, then I only have to pay $2,000 per contract, right, to get 100 shares. So that's the goal, right, is to kind of accumulating shares that way. Of course, it's a bit risky too if it fall below this right here. I would be at a loss substantially too. So depends on, again, the market here. Everything went down this past few days. I went short on Nvidia, but I sold way too early. So for a small profit, I was like, I missed 2 days. I would have had like 20% down. I mean, 20% high, at this time. But I was like happy with 5%. It's okay. It's okay. It's life sometimes. You can't catch them all. You can't catch them all. Let me see. So with this price action though, I just think, I know, like, I'm kind of hybrid here. I do accumulate a lot of shares too. In terms of like my trading account, I have not added too much to my Roth quite yet, because I'm kind of waiting for the 22 and $20. I really think that it might come down to that, to fill this gap as well. So remember, there's a gap over here that hasn't been filled, and apparently there's a small gap down here too. Which one was it? Or up here, down here, somewhere. I have to look at the daily candle here. Okay. Let me see if I could see that one. So this is when Ryan Cohen bought in the 20. Let me see. Around $22 or so. His price point right there. I could have sworn I saw a. Maybe this is it right there. The yellow line here. Let's bring it down here just to get some more visibility. So my thought for my Roth, I'm gonna add to my position around 22. Hopefully it's going to come down to 22. If not, obviously, if it bounces up to this particular trend line, it might do this thing where it breaks down, tests, come back. Maybe it's already tested that. And then come back down. So if this thing is breaking down, the support line is going to come down to fill this gap, I bet. So you guys, whoever who's new to this, might be able to buy it at $17 or $19 again, or $20. Yeah. So again, price action doesn't really matter. Like I said before, nothing really changed that much about the company. Company's still doing great. Balance sheet's great. The money is there. No chance of bankruptcy anymore, right? So to say that this company is going to go bankrupt, or it's not valuable, or it's only worth $11 a share, I think that's a bit underestimating the value of this company. Just my thought. Now I've been tracking this particular indicator as well. So it's kind of wanting to curl up. Oftentimes you want it to hit this red zone for you to buy. So I'm kind of waiting for that one, because like if you were to look at the historical price action here, you would see anytime it reached that red zone, it's the best time to buy, right? Of course, this doesn't give the best reference here. But if you were to accumulate here, yes, you would have been down. But if you accumulate here as well, you would have been averaging right here. So the goal is to always, find the opportunity to buy at the low. And if you continue to buy at the red zone, you will come ahead at the end. So buy here, right? Red zone. Buy here, red zone. So that's what I'm looking at. Of course, like this is just a simplistic way of explaining what I'm using this indicator for. Sometime it doesn't even hit the red zone, and you miss the opportunity to buy at this dip right here, right? So that's fine. I mean, this might be the time that it will never reach that red zone, and it just continue to flip. But I'm sure, they're going to complete this particular action here. Of course, I'm not a technical person here, but it seems like this is a small correction here, right? Again, I'm a bit biased here, because any support I would be like, it's gonna bounce sooner or later. And then it never does, and then it's like, I should have buy it at this price right here. But of course, this is the point of investing, right? And the point of dollar cost averaging down, because then you don't lock down by the price action that much. And then you're gonna be like, oh, okay, by the time you accumulate more and more, you're gonna get more shares at the end. As far as traders, obviously they're gonna try to time the market correctly, or the right way, or whatever, because people don't want to sit tight on this particular company for some reason, right? Because they have the conception that this company is not good enough for them to put their money in. So to me, that's an opportunity for me, right? Because again, as a person that follow this company quite a bit, know quite a bit about this company, more than an average person, I think I'm in a position to be like, okay, if you want to sell it to me $24 a share, okay, I'll accumulate more, okay? So why is this a good price point still to buy into. Look at this. Like, it held pretty well. Not saying that it's not going to break down. Obviously, the obvious support is right here, which is 18, say $19 a share, right? The simplest way to look at this thing. So this is a buy zone for me, right? Accumulation zone for me right there. So with this one particular level, you would buy this company around this much right here, okay? So 45 to 50, oh, 55 actually. Yeah, 55% is equity. Okay, so when you buy it, that means for every share you buy at this price, $10 is book. Remember that, because this is not popular yet. It's gonna be popular 2 months from now when they announce the earnings, okay? So remember, I did a video about how Google doesn't tell you yet that this company has a better price to book value than it's currently calculated. So let's look at that real quick here, just to show people, just in case they forget. And I think like anything good about this company, people seems to forget, I feel like. So let's remind people over here. So of course, we're in a positive. Please remember that. We're going to be positive the next quarter as well. Please remember that as well. But if you look at the price to book for this particular current data for quarter one, okay? This is only accounted for quarter one, you guys. So they don't even account for the dilution yet, you know, or the money capital raised by share offerings. And those yield us around $3 billion additional to what we have. So, I think cash on hand right here. So if they add $3 billion to this particular balance sheets, they would have a better price to book value than this. So it's going to be around 2.5 or 2.6, around there. Well, let's do it. Let's do it together here. So it's the current price. So let's say it's 24 divided by 10. Again, ballpark. Oh, 2.4 actually. So 2.4 price to book. That's pretty good for me. Oh, 1 second here. Yeah, I feel like I have to go soon, you guys. I know I'm a bit short-handed, short-minded, short-formed, short-formed. I need to make a call soon. But let's see. I just want to hold on 1 second. I know I'm a bit rusty, you guys. It's been 11 days since I've been posting any video. Like I said, it's been quite a bit of a journey. And but anyway, so let's look at this real quick here, because I feel like, you know, people don't revel at this amazingness of this particular company, okay? Sorry, I have to use some colorful language here because sometimes people need some hype. Anytime there's a price action doing this thing, like where it's like, GameStop doesn't do anything. It's just flat and flat and flat. Really? Are you kidding me? We've been, what, since the low? Like 140 freaking percent in 3 months, or even, no, 2 months, not even. See? I mean, people, sometimes I just want to like smack people in the face. And it's like, yes, It's been 3 months since it's running like crazy, but 2 months, sorry. Chill, Is it gonna be dead? I don't think so. I think something is brewing. It's like there's a saying, right? Calm before the storm. And so, yeah, right now we're in the calm, and this is the best time to buy. Anytime it's boring like this, you guys, the best time to buy into the stock. Every single time. This is the best time to buy. You know why? Because it's boring AF, okay? This is the best time to buy when it's boring, when it's red. What happened? And again, the history is made over here already. From 10 to 80, boom, right? From 80 to 17, from 17 to what? 45 or 40, say 50, right? And now down to 24. So what do you think what do you think they're doing to you right now? Psychologically, it's a psychological warfare here. And the only people that will benefit the most here is the most patient, just like Warren Buffett said, right? The stock market is an instrument to transfer wealth to the most patient from the least patient. Whoever's like buying and selling and all that stuff, now I do that too. Yes, call and all that stuff to try to, again, gain the percentage, right? But I use option knowledge to do that in the best way, the safest way possible. Of course, safe is relative. Anything that has to do with option is very, very risky inherently, but I am offsetting my loss by, a strategy, right? So just be aware of that. And when you're buying and selling and hoping to gain those shares or those money from, selling it at a high and then buying it at a low and all that stuff, right? Again, you cannot predict those type of things. I'm sure most people who have, who have sold over here thinking the run was over was missing out on the run thereafter. And so I have my strategy here. And so you should develop your own strategy in order to stand to benefit a lot more. Now, long-term strategy obviously is going to reap the benefit the most, the maximum, because then the company is going to grow with it as well. The company is going to hold those valuation a lot more stable than you see in the price right now. Currently, people are just searching for the price. I'm sure, because of the manipulations and, whatever, right? Well, it depends on who you are. If you don't think it's a manipulated stock, then, perhaps you might want to take a look at the valuation a little bit closer to see how valuable this company could be. I could only show you the balance sheets here. And, I'm sure people point out, oh, look, they are cash flow positive, negative for the last 2 quarters. Understand what they're doing there. Why are they cash flow negative? If you take a look at it closer here, right here, they were reducing their liability quite substantially. So from 1.8 billion to now $1.2 billion. So they did that, and of course, some asset was diminished as well. Not diminishing; it just moved to a different type of bucket of some sort. I'm sure, paying off liability and all that stuff is going to give the impression that they went from 3 billion to now 2.5 billion. But if you do the ratio, how Marantz was saying, the current ratio, right? Let's see right here. You look at right there. It will give you a better picture of how the company is being, use the capital. Right here, current ratio, the highest it's ever been. just like Moran's is saying. So from 2.1 to 2.22, right? So that's, again, this is the incremental improvement that we want to see the health. This is a healthy company, healthy balance sheets, right? Yes, earnings has to be there. We are fixing that right now. Yes, revenue has to go up. That's a pain point that we have to fix. But if this is the only problems that we have to fix, it's a good thing to have, right? We've been fixing the profitability issue already, right? For the last 2 quarters, we come in a trailing 12 or positive 2 quarters, okay? Again, this is a trailing 12, so please note the difference. Because when people are telling you, oh, look, they lost money last year, you would understand the difference here. Okay, yes, they lose money for last quarter because the first quarter, usually first quarter is the worst quarter. If you don't believe me, go look at it yourself, like the historical, you know. Of course, some quarters is better than others due to the business cycle, due to, you know, how many people are willing to shop at the time. And so, you know, business is dynamic. It's not always stagnant all the time. So to say that the company will lose money this year or will make money this year is also a fallacy too. So the only thing that we could do is just to wait and see the number for ourselves and not projecting, right? Of course, as human being, as myself, I like to project ahead, right? I like to at least use some of the trend base, which is why trailing 12 is the best way to take a look at the data or aggregate it so that you could make the analysis, make the slope line, right? It's like, okay, if the trend is going up, that's good, towards the right direction. I know, like, if you compare to the amount of money that we have been burning, quote unquote burning, because when we say burning, sometimes we use those cash, like these type of cash, to pay off debt, right? That's what or pay off liability or something like that, so that we have a better ratio to work with. So in my opinion, obviously, if you have better ratio, you have better leverage when you need to leverage your company. Currently, you don't need to, right? You have the ability to. I'm sure Ryan Cohen could go out and you know, use company collateral to borrow money and then add that debt onto the balance sheets in order to inflate the valuation of the company. I'm sure Ryan Cohen could do that. GameStop could do that. But why would we do that? Why would we want to overinflate our balance sheets using debt? It's just temporarily, you guys. Like, this guy is here for decades. Ryan Cohen is here for decades, building layer growth or whatever. Yes, it's slow, drawn out. You're not gonna like it if you are here for the squeeze and all that stuff. But understand this, though. The people that stand to benefit most is the people that's sticking through thick and thin with this company, and of course, add one share at a time, like Moran's was doing. 1 share at a time, 1 share a day, or whatever the amount that you're comfortable doing. Just do it slowly, you know. Now, if you want to try your luck and trade in and out, do it as well if you're knowledgeable enough to do that. But again, just don't fall into the lines of people who are, you know, frustrating at the price action, and then they say, "Oh, this is a shitty company." Remember, when GameStop fall down like this, right? Constantly you hear GameStop go bankrupt. GameStop is this. GameStop is terrible. Look, it doesn't move. All it does is going down. Anytime it gains any value, it's coming down. Okay? Again, those are trader mentality, right? As an investor, obviously, you know, sometimes I get frustrated as well, because yes, every time I buy, it seems like price going down. in my opinion, I think it's algorithm programmed to do that, to make you feel some sort of way. And I understand this myself too, because, I've traded Bitcoin before the same way. Anytime I buy Bitcoin, down the next day, down the next day. But if I hold it long enough, and I did, I was able to benefit a lot from the gain that I have from Bitcoin. And that was because of long-term investing prospect, right? I held it close to 3 years when it blew up. But of course, like I have more back then, more knowledge of Bitcoin at the time. And so again, just to draw it back to my past experience on applying my knowledge of, hey, maybe you need to be a long-term investor as well. Not to say, trading is not valuable, but my thought is just that it's very stressful for regular people to get it right. So just because you couldn't time the market right doesn't mean that you can't participate either. Just do it responsibly, And Moran's told you how to do that. It's a very good balanced way and less stressful way to get in on this particular company here. Of course, my price, let's see, my average cost is coming down, you guys. So it's around 30 now. I have to double check, but I'm gonna add some more. I have been saving, but again, depends on what expenses coming up. I'm planning a trip, maybe we'll see. If that's the case, I'm gonna bite my I don't know, my teeth, and it's like, I should have put it into Gamestop. But hey, if sometimes you just have to live your life, right? A little bit. And also too, my thought is that I have enough shares for now. Don't need to be too greedy here. But if the trip doesn't pan out, then I'm gonna just put it on GME here. I might sneak a couple hundred here at this price if it ever dropped down to that level. Again, I think if the S&P 500 comes down, right? I've always had this thought, you guys, that yeah, like this is panicky, right? People are panicking, and that's gonna affect GameStop as well. So just be aware of that. I know people have this notion that GameStop has a negative beta. Look at this. Well, a small amount of negative beta there. And now I know that the reported short interest has been lower. It used to be 14, now it's 20. It used to be a lot higher than this, and yeah, maybe they did cover. No, baby girl. You guys, she just chews on my shoes. Never mind. Yeah. You destroy my shoes, you guys. Okay, that's fine. All right, so the short interest is lower. I've noticed that. So it's only, I don't know, again, this is just reported short interest. If you look at this particular data right here, you would see a little bit of like discrepancy, right? There's a lot of short volume here. Now, I'm sure they have changed some rules and they might be able to close after hours or whatever, right? That's why we don't see any meaningful price action here, but they could hit it on the swaps and all that stuff too. So who knows? Again, like I I hate to speculate on those things because I don't know what the mechanic is. All I know is that I have more shares than I have ever been, right? Much more than 5x when I used to add it, you know? No, sorry. Don't let me say that. 3x the amount of shares that of my original position here. So, I mean, hey, over time it's gonna be more, you know? Hi Carter, what's up? What's up? I know I'm on my way out. I am so sorry. It's not you, Carter. It's not you. I just want you to know that. But thank you for tuning in now. Um, let's see. So yeah, back to the swap idea. Like again, I don't like to speculate on those things because I don't have the proof. I don't have the knowledge of where those is hidden and how it's being done. I just know that I have more shares than I've ever been. And my assumption is that all of you who's been investing in this before Ron Kitty come back the second time have been adding as well. So it's easy to assume that we already own most of this company multiple times over, right? Again, my assumption here might not be true, might be true, who knows? But as far as the price right now, all I know is that I could buy GameStop at $24 a share currently, and might have the opportunity to buy at a lower price even, right? Depends on what the market is doing tomorrow. Of course, people are expecting a more downturn, so that's why I'm thinking perhaps it's gonna come down here and then we're off to the race again. I guess depends on how many people would sell, right? You know, I'm not, I mean, why would anyone sell at that price point if they don't sell it over here, they don't sell it over here, right? They don't sell over here. Why would anyone sell, right? So, you know, there are more investors out there now, and the fact that GME has a better balance sheets now, it's very difficult for me to think that it's gonna go any lower than this support line right here, right? So that might be the last opportunity for anyone to add in. So just be aware of that. Or we might be able to just blast off from here. Who knows, right? Who knows? Anything could happen here, you guys. Anything could happen. But let's see. Oh, I'm actually curious about this. So what is the retracement since the last run? So let's do that real quick before I let you guys go. I know you guys, I'm a bit kind of rusty and kind of feel like I have to make some video. And then I'm like, what kind of topic am I talking about? You know, there's nothing to talk about at the moment. But anyway, so it seems like it's been retracing pretty hard here to this 2.36. So usually this is it needs to hold above that point, or it's gonna come up lower, right? To 10. Oh my god. Seriously, it's gonna be that $10. Come on. That would be like, you'd be stupid not to buy. Not calling people names here, but I'm thinking, you'd be stupid not to buy. Now, if you don't account for that $80 run and just do this midpoint right here, which is $50, we're still in the golden zone, and we're kind of breaking down a little bit there. But I don't think that's how you measure it like that. Most people would go up here to the not $80 even, $60. Okay, baby girl's got my shoes again, you guys. So let me try to prevent her from eating the rest of my shoes here. Okay, all right. Same old thing. I know, right? Just same old, nothing changed. And the companies hasn't changed a bit. If anything, we're getting better at. at doing things, right? Better operators, slowly but surely building that brick by brick type of thing. I know that mentality is kind of like long drawn out and not appreciated enough. You know, people who try to build something usually is being scoffed at, and this is what I've noticed in this past decades or so. Because again, you have these private equity who owns the social media, and usually they glamorize the companies that have more debt. That they promote those companies to you. And again, this is a circle of conflict of interest, right? Of course, Barclay or any company, like here, for example, I think Broadcom. I think I did the video on this one. Now I know this company is like, I'm not saying it's a terrible company, but if you look at the metric right here, P ratio, it's pretty expensive currently. But if you look at the forward P ratio, they're projecting it a little bit lower. Better valuation here. But look at this, book value, price to book value, right? I know that technology is usually traded at a higher premium, at a very steep premium here, but why would I buy into this one when it has debt to the eyeball? And guess what? They just add recently in July, and I did a video on this too. $5 billion more on top of this right there. Senior note, they just created senior note at 5.5% a year, APR. Oh, APY, sorry. So now they're burdening shareholder. Again, usually it's common stock shareholder. It's not anyone. But anyway, so this is the symbiotic relationship between the bank, companies that they promote to the rest of the world, retail or pension fund to buy. See, buy, strong buy, $200. That's what they think, and that's what they want you to believe, right? But yet they just add $5 billion more. Okay, if they could earn 6% on top of that every year, great on you. But again, you have to strain yourself so much more to make 6%, because you have to make 6%, right? Because if you make less than 5, you are actually in the negative here. So my point is, the more debt you have, the more that you have to earn on top of that debt payment. If not, guess what? You're going to go bankrupt, or you're going to diminishing your income level. Let me show you what I mean by that. If you look at the income, see, net income, decline 24%. Okay, so what do you think is going to happen to that $5 billion that they just added to their balance sheets? Right? Yes, it's a debt. Yes, it's going to be an asset for the short period of time, but it's going to eat up this. Okay, now if you do the calculation, $5 billion, 5% of 5 billion, what is that? That's $250 million more that they have to make on top of this interest payment right here. See, interest expenses right now at the moment is $2.7 billion. So if you add more debt, they're gonna have to make interest $3 billion. But yet they are promoting it to you to buy into this. Like, why? You see that? Did you see the relationship here? Yes, look at this. All revenue is up, so they could cover it. They will be able to cover it just fine, right? Okay, guys, I'm gonna sign off here. I'm gonna open some green product. I know Ryan Cohen. Thank you, Ryan Cohen, for creating Chewy. I do have Chewy. Anyway, yes. Just great order over here. Right. Oh, hi, Jay. What's up? I haven't seen you in a while. I am signing off though. Thank you for joining for me the last minute. I know you are a great fan of mine. Me too. Yeah, what's up? But yeah, let me finish my thoughts here. So this is the type of company that they are promoting to you. Okay? Diminishing in net income, but yet increase in revenue. Right? GameStop is the opposite. GameStop is the best because guess what? Guess why? Look at this. We are the opposite. Our net income is going positive while the revenue is down. Okay? And this and there's a reason why. I mean, reason why people on TV promote this one to you is because the bank own it, right? Because the banks are the one who owns those senior notes, you guys, from this Broadcom, whatever, debt, additional $5 billion. Those are senior notes. And senior notes get paid first. So this company just load more debt at the expense of common stock shareholder. You and I, whoever bought into this, unless you know how to buy senior notes, you won't get that 5%, interest on your investment. Again, to me, this is not a company to buy into, but again, if people are promoting it to you and stuff like that, just understand what you're buying yourself into, right? What you buy, why are they doing that? I'm sure if you look in deep into it, these people are probably the one that bought those senior notes or have some sort of relationship, right? Obviously $75 billion of debt has to be held by somebody, okay? And retail don't have $75 billion of money to buy into debt. This company. So be aware, be vigilant on stuff like this, and understand. Again, yes, GameStop is very small right now, but we will be the big one day. Hopefully, 2 years from now, that's my projection here, that we might be able to get to the S&P 500 in 2 years. If under that, of course, great. I'm here for it as well. But this is a oh, look at that. This too, look. 4 billion shares outstanding. That's way too many shares already. Too big already to even make any money anymore, right? In my opinion. To even grow 20%. Like, it's ridiculous to grow 20%. Just like Nvidia, right? Like, is it financing by buying at the company that buy your own product, and kind of like looping your profit that way. But that's unsustainable. Like, you cannot sustain it without cutting into your net income. And it seems like it's gonna be kicking the can down the road. Because you can't think about it. Like, it would take them 7 years of zero net income in order to pay off those debt back. 7 years, or actually 8 years of net. Anyone in their right mind, no CEO would do that, but Ryan Cohen does, right? But again, I'm sure if Ryan Cohen got into this company, he's gonna like immediately pay off the debt. Because it's crippling. Look at this, you guys. Interest payment is going to be $3 billion. is a lot. It used to be 1.8, 1.7, 1.6. Now it's jumped. Crazy, crazy. Okay, all right, you guys, this is all I have. Thank you for tuning in again, everyone. Sharon, Carter, Michael, Manuel, and Jay. Appreciate all of you. And I will let you go and buy some more shares. Buy some more shares. No, I don't know. Just do whatever your heart tell you to do. But my thought is, I'm looking at that level right there. So 19 to 20. So just count yourself lucky if you ever see GameStop at $20 again. Okay? All right. Signing off.